How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 within my Vanguard brokerage account. Now, seemingly impossible to do during such a state of flux when it comes to the stock market. We were building momentum all Friday morning, and then come 2 hours before the markets closed, we lost all of that steam. Every single composite took a beating after news came out about Russia potentially invading the Ukraine. Then we had the FDA come out and announce they were delaying a meeting which was supposed to put a stamp of approval onto COVID vaccines for younger kids. Now, all in all, geopolitical tensions, while yes, they do impact the market in the interim, they're not permanently affecting the stock market, and a temporary setback when it comes to the FDA. So what is it exactly that is really impacting us more than anything? In my opinion, it is inflation. We're going to talk all about inflation in today's video, how best we as investors can go about investing during these high inflationary periods. In terms of my personal account where I sit right now, we lost a lot of steam along with the rest of the market on Friday, falling by $1,969.91, now leaving my account sitting at $84,970.67 on the day. But we can't be sweating this because as long-term investors, getting invested into the right positions now is going to set us up for future success. So this is going to be a video you will not want to miss out on. Before we dive in, tap on that thumbs up button and help me grow this channel. And if you yourself have not already subscribed to the Blue Lion Finance channel, go ahead and make your way over to doing so. I'd certainly love to have each and every one of you on this journey with me. Now, YouTube, let's go ahead and dive right in. So today's video is definitely going to be a little bit different from the videos that you're used to, in which I'm talking about discounted stock opportunities or stocks you should add to your watch list. Today's video is going to be all about the strategy that you and I should be deploying during these high inflationary periods to be able to capitalize on the market mayhem or the fear, the uncertainty that is out there. And that is most important for the long-term value investor. And certainly it is true that inflation has popped above 7%, which is pretty alarming considering we haven't seen these levels of inflation since 1982. And the Federal Reserve definitely went ahead to press that panic button, but they are going to be making those chess moves towards combating inflation come March and raising interest rates. Now, by default, once they raise interest rates, the stock market as a whole for the investor will become less enticing to invest into, as big business won't essentially have the means to continue to expand as they were doing over the last 2 years, which ultimately translates into the investor not walking away with as much of an ROI compared to when interest rates are lower. But I do think overall this is the exact move that needs to be made by the Federal Reserve in order to literally save our economy and continue to help us progress. Now, across YouTube, I'm watching YouTubers come out with videos about how they're selling out of all their stock positions because the biggest crash ever is about to hit us. And of course, we're getting a lot of those news articles as well. And this is exactly now why I'm making this video, because that is absolutely not the move that we all should be making as long-term value investors. Again, as I mentioned, now is the time we should literally be doubling down on high-quality positions. And there's no better investor out there to help us better understand how to invest during these market conditions than Peter Lynch, the man who actively managed Fidelity's Magellan Fund, which is the largest in the world. He managed it from 1977 to 1990 and averaged nearly 30% annual returns. Have a look.
There's a company behind every stock. If a company does well, the stock does well. It's not that complicated. People get too carried away. And first of all, they try and predict the stock market. That is a total waste of time. No one can predict the stock market. They try to predict interest rates. I mean, if anybody would predict interest rates right 3 times in a row, they'd be a billionaire. Considering there's not that many billionaires on the planet, it's very, I had logic, so I had a syllogism and studied these when I was at Boston College. There can't be that many people who can predict interest rates because there'd be lots of billionaires. And no one can predict the economy. I had a lot of people in this room were around in 1981 and 82 when we had a 20% prime rate with double-digit inflation, double-digit unemployment. I don't remember anybody telling me in 1981 about it. I didn't read, I studied all this stuff. I don't remember anybody telling me we're going to have the worst recession since the Depression. So what I'm trying to tell you, it'd be very useful to know what the stock market is going to do. It'd be terrific to know that the Dow Jones average a year from now would be X, that we're going to have a full-scale recession, or interest rates are going to be 12%. That's useful stuff. You never know it, though. You just don't get to learn it. So I've always said, if you spend 14 minutes a year on economics, you've wasted 12 minutes. And I really believe that. Now, I have to be fair. I'm talking about economics in the broad scale, predicting the downturn for next year or the upturn or M1 and M2, 3B and all these M's.
Man, oh man, how history always repeats itself. Now, that particular clip was filmed back in 1994 when Peter Lynch delivered that speech. The market conditions were relatively the same to as they are right now, in which inflation was running higher than we would have liked it to. And he did go back to share about 1982 and those double-digit inflationary rates and how everybody was incredibly scared. But at the end of the day, nobody can predict the future, nobody can predict the stock market, and nobody can predict interest rates, because if they could, well, we'd have a ton of billionaires out here. But because we can't, it is all speculation, which leads to the big question, now what?
There are economic facts and there's economic predictions. And economic predictions are a total waste. And interest rates, Alan Greenspan's a very honest guy. He would tell you that he can't predict interest rates. He could tell you what short rates are going to do in the next 6 months. Try and stick them on what the long-term rate will be 3 years from now. He'll say, I don't have any idea. So how are you, the investor, supposed to predict interest rates if the head of the Federal Reserve can't do it? So I think that's, but you should study history, and history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means, that's a euphemism for losing a lot of money rapidly, but we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. And so you can take advantage of the volatility in the market. If you
and there you have it. We literally just have to take advantage of these declines because it is what we know right now. Anything else is pure speculation. Yes, it would be ideal to understand what the next 6 months holds for us, the next year or 2 years or 5 years out, but we just do not know what the interest rates will do, the implications of those interest rates rising. We don't know the market conditions to come, but we know what we know right now, and that is that there are high quality stocks that are currently trading for discounted prices. So forgo the news, forgo the speculation, forgo the fear, and just double down on high quality stocks and do so for the long term.
And then I want to conclude with there's always something to worry about. If you own stocks, there's always something to worry about. You can't get away from it. What happens in the 50s, people were worried about, the only reason we got out of the Depression was World War II. We got another recession in the early 50s. They said we're going to go right back into a depression. People were worried about a depression in the 50s, and they worried about nuclear war. In the 50s, people wouldn't buy stocks, except for the 80s. The 50s was the best decade, this century of the stock market. And people wouldn't buy stocks in the 50s because they're worried about nuclear war and they're worried about depression. Then people, remember when oil went from 4 to 40 and it was going to go to 100 and we're going to have a depression? Remember that one? Well, about 3 years later, the same experts, now higher paid, oil's now at 10, and they said it was going to go to 4 and we're going to have a depression. And then the Japanese, remember how the Japanese were going to own the world? Remember that one? And that we're going to have a depression? And then about 2 years later, we're all worried about Japan collapsing. And this is the most absurd thing I've ever heard. There's a company with a 20% savings rate, incredible workforce, incredible productivity, and people are saying we're going to have a depression because Japan's going to collapse. And they had, on their prayer list, they lowered Mother Teresa and crippled children, and they were praying for Japan at night. Always ends saying we're going to have a depression, or the Great Depression. We're going to have the Great Depression. I never could quite understand that adjective in front of depression, but the Great Depression, or the big one. The big one's coming. So there's always something to worry about, and the key organ in your body in the stock market is your stomach. It's not the brain. If you can add 8 and 8 and get reasonably close to 16, that's the only level of math you need to know. You don't know to need the area under the curve. Remember that quadratic equation and an integral calculus, and the area under the curve. I mean, whoever cared what was under the damn curve? I mean, you know, but you had to study this. You don't need this in the stock market. So all you have to know is you're going to see, it's always going to be scary. There's going to be always something to worry about. And you just have to forget all about it. Cut it all out and own good companies or own turnarounds. Study them and you'll do
There,
well.
YouTube, that is it in terms of today's video and how best to invest during high inflationary periods like we're currently experiencing. And I didn't just want you to hear it from me. I wanted you to hear it directly from an investment legend like Peter Lynch himself. Now, if you liked what you heard, you learned something new, drop those comments below. I'd certainly love to read through them and understand your investment strategy during these times. And before we close out today's video, tap on that thumbs up button and help me grow this channel. And if you haven't subscribed already, make your way over to doing so, because I'd certainly love to have each and every one of you on this journey with me. Now, YouTube, until the next video, I will see you all there.